Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who will hopefully be here at some point. Not here yet, though, so you just get to deal with me. How is everyone doing today? Hello, Wavy. Well, it felt like a roller coaster day, up, down, and you can have days like that. Hey, Tesla Force. Mr. Akara? I hope I didn't butcher you. I'm really bad with names. Akara? So let me know phonetically. My entry was perfect, but ended up being the day being a bag holder, hopefully green tomorrow. Do you know where your stop is? Because before you even get in a trade, you gotta know where your stop is. If you do not know where your stop is, you should not have entered the trade. Lots of volatility. Hey Ted, how are you doing? Hey Jake. By the way, if you are new here, you want to join our fine group of trading and investing. I don't know what are we? What are we? The fine group of traders and investors. Then you hit the like button, you subscribe to the videos, and you ring the bell. Longer term viewers and members, please hit the likes and leave some comments. So it looks like we do have the one, the only, the world famous Bob Iacchino in the house. World famous. Now in the corner, world famous. How you doing, Bob?
Good. How you guys doing?
Oh, I'm alive. It wasn't a terribly good day for the Bulls that tried to get a little rally on, and that really fizzled out in the end. So that was not good price action for them. Bob the Baker is here. Yes, Bob the Baker is here.
What's up, guys?
What have you been baking, Bob?
Nothing lately. Been too
Nothing.
tired.
Uh,
Way too tired.
well, Wavy feels tired too. Long day. I feel tired. Bob feels tired. Tesla Force says, "Hey, Christoph, market shouldn't do big things prior to CPI." When is the
Yeah.
CPI? Oh, by the way, let's see what's going on in
CPI's
the.
Thursday.
Yeah, it's Thursday, but tomorrow we just have mortgage applications and then a bunch of crude oil stuff. That's not going to move the market. Crude has nothing to do with what's going on in the world, so
No, it's got nothing to do with it.
nope. So we're not going to buy Russian oil anymore, right?
Yeah, I thought it was fun when Canada banned Russian oil, considering they exported no Russian or imported no Russian oil. So they went ahead and banned it. Trudeau's very brave. But yeah, I mean, most of the Russian oil that we get, okay, so mostly we import refined products from them, not crude. But that's banned too because we've banned energy. So my understanding is that includes refined products, but I also know that I could be wrong about that.
How about uranium?
Um, no, I don't think so. I don't think we have not banned any of the metal. What do you call those? There's a
Uranium's an
word.
energy product.
Yeah, I know, but it falls under that other metals category. Not rare earth, but whatever. We didn't ban uranium. Um, but we also didn't ban metals at all, which is interesting because about 30% of the world's smelted copper comes from Russia. Not the copper ore, but the post smelting process. So it's interesting because crude oil, it didn't surpass yesterday's high, but it did close higher than yesterday's high. I would call today a more bullish day than yesterday was. Excuse me. But it seemed like the market had priced us in. Now the next step is, does the market start to price in retaliation from Russia? Because also the UK did it too, right? The UK did just crude oil, not energy. So energy's still good. That's what's funny. I mean, how do they play this stuff out? Like the government says, we're not buying your oil anymore. We'll still take your gas. Don't get upset. But not the oil.
What accent is that,
Right.
Bob?
Well, Matt, it always turns out Pakistani, but I try to, no matter what accent I try to do, it always turns out Pakistani.
I would not have guessed that was Pakistani, but I just think
Well,
you've
it
pumped all your.
started where it was supposed to start. Rich brings up a good point about the neon gas. Do people know why neon gas would matter? I'll bet you Rich does.
Because I
Used
can't make my
in
signs.
chips.
I can't make my glowy signs without it.
Neon signs are pretty antiquated, except for in Asian massage parlors. But the chips, semiconductors, use neon. So semiconductors use neon. So it actually theoretically, if the production of neon is hurt, and actually about 75% of it comes from one factory in Odessa. So Odessa isn't really in the midst of the fighting yet. But if it were to affect that, you would have more of a semiconductor shortage than we already have.
I just think we're going to run out of everything. Yay for
Yeah,
us.
I think so too.
Yay, it's going to be really fun, isn't it? May you live in interesting times.
Very interesting.
So,
Very,
well,
very interesting.
Crude, we do have a fully not triggered, but we do have a call it a ratified potential double top. So we will have to see. We have a lot of interesting setups in the markets. We had this little mini double top, which was very nicely tradable today on a 15-minute, coming back down and then reversing back up. And now we have this 4-hour double top. Again, not confirmed yet. You need a trade below 115.54 and preferably a close below there. But that is the potential. Now, remember, just because it's potential, we could easily still rocket higher. But we do have to monitor all our setups. Right, Bob?
Yes.
Are
Got to
you,
monitor
are
all
you
our
monitoring
setups.
your setups right now?
I'm in a Twitter fight.
You're in a Twitter fight with who?
Matt Sparling.
I okay. Well, Matt, you're gonna lose. Hey, Sashi. Uh, most chip companies will get wrecked. Well, and then we have the whole other issues with semiconductors, which hasn't even come into play yet with China potentially. But let me go through. While you're doing your Twitter fight, I'm going to take a look at some other market action. The S&P down for the day, tried to stage this rally up to the daily rotation zone, and I'll show you my little short-term targets. There was a great little momentum trade to the upside today, and then rolling over. Again, we talked about those momentum bars. Here was a little momentum bars play. Okay, especially up in here, you get into the talked about this too. In the market preview, you got in this little area of clear path up there, and so the little momentum play was, as I said, you put on your retracements. It got a very shallow retracement, so unless you got aggressive with this buy, then you do the breakout and the harmonics. Again, for those willing to and wanting to learn the harmonics, that was your low point at 10:30 Central Time to the pausing bar of the momentums. You see these momentum bars. And that gave you the 42.61, 42.73, 42.73, and then you get the momentum back down into the clear path. This was a breakout area right here. And then finally coming all the way back down. So just wanted to point out how you can use those little momentum bars to do a little continuation on play and using the harmonics to help identify those areas. There we go. Are you done with your Twitter fight?
No, but I'm ready for questions. My mind is wide open.
Well, yeah, but that's not saying much. uh, we could see a 10% CPI print. Wow.
Yeah, we could. I mean, I think it's either Goldman Sachs or Morgan. I don't remember which one of them. It might be Morgan. Their estimate's over 8%. Now, remember, this CPI is likely not going to have much of the recent commodity rally in it, but it will have some of the early commodity rallies in it. Crude oil was already up to 90 some dollars when this came out. And this would be one where I don't think core CPI it'll be said that core CPI is the most important one, but I disagree with that for this specific CPI number.
Why do you disagree with that?
because it's actually the trickle down effect is it's like a trickle down trauma on CPI this time because literally everything is up. There's no replacement for fuel. You can't replace steak with chicken when chicken is up too. Everything is up. So you can take out food and energy if you want, but durable goods are up, automobiles are up. I mean, everything's up. So we might as well look at both.
Aren't we just supposed to go all buy electric cars though, because gas is up?
Yeah. Who's Pete Buttigieg says you should, it's great. You should buy electric cars. Okay.
As those
Yeah.
prices go up too because of all
Yeah.
the
Yeah.
everything
That's,
they're
that's great.
dependent
That's
on.
great
It's not
advice.
like they're not going to go down with all the everything going on. Also, let's see. Rich says, Bob, they're scrolling pretty fast. I think we're in a period is very similar to the period that we're in the 1930s. There are only two times in the history of the century where we had debt crisis in which interest rates hit zero, and in both those times the central bank had to print money and go to a different type of monetary policy, which we call quantitative easing, and to buy financial assets. So, what do you think? All right, what do you think with everything going up now, pretty much besides stocks, everything, everything tangible going up, okay? Like
Yeah.
wheat, corn, soybeans, metals, oil, gas, everything. What do you think the longer term outcome is going to be? Like for the economy?
I guess, yeah. I mean, I guess that again, I think stocks have to reprice. We've actually got some of the earnings estimates have now gone negative in terms of guidance from companies. Some of the earnings growth in certain sectors have gone negative. So, again, I think we're seeing this rolling down move, and we've compared this to 1999, 2000 before, and it looks more and more like it to me. Now, does that mean this is going to drop 78%? No, I'm predicting 45%. Now, I pulled that out of my ass, but not really. I don't have a model that predicts that. I just don't think this is overall on a macro level as bad as that bubble. And I actually think the Russian war is helping weed a lot of the bubble effects out. But I do expect probably about 45% between the NASDAQ and the S&P lower. So 20% will be in the bear market. You'll see a lot of these people running in and saying, well, you saw it today, right? Rallies don't hold, even if they hold for a couple of days. And that's bear market activity, right? You'll see huge rallies. In the 1999-2000 rally, we saw two of the rallies that it had during the bear market over 40%. But I think this is the precursor to a bear market. A bear market has a definition, down 20% from a recent high.
Didn't
The
we get
Russell
that?
actually hit that.
We
NASDAQ
get that
actually,
in the Nas. Yeah, with Nasdaq hit
both
that.
Russell and the NASDAQ. NASDAQ hit 19.8, I believe. And the NASDAQ hit it. But you have to be in it, right? You can't just dip in there and go up and they could say, well, it's the shortest bear market ever. It was 4.5 hours. Right. We got to spend some time below it.
Well, didn't we have the shortest bear market ever like last year?
Yeah, we did. We did.
Like it was literally a 10-minute bear market.
Exactly.
Well, when you open up the money spigots, that's what you go. What do you think? What are your thoughts on a pullback in oil or oil stocks?
One more time.
What do you think about a potential pullback in oil and or oil stocks? I mean, they've ramped tremendously. See, like, where is that? Chevron. I mean, look at the price action in Chevron. It's up. I mean, that's a massive. These are getting to the vertical point of view. So, what are your views on pullbacks or?
I think they're both going to pull back. So there's a couple of things. I mean, first of all, the energy companies are going to continue to have record profits. There's people out there talking about price gouging. That's not the case. Energy is sold on a percentage basis. They have a percentage profit built in. When the price goes up, the dollar amount of that percentage profit increases while the percentage profit stays the same. Does that make sense?
Yep.
So if they have a 1% profit, if they sell gas at 5% or $5 and they have a 1% profit, they're making 5 cents, right? If it's $6, they're making 6. So it's not necessarily price gouging. I will say when I've seen them gouge in the past is when crude oil prices come back down. Right now, they're in competition with each other to sell the gas. So they raise the prices and they might actually tick it down a tiny bit here and there to compete with each other, because at these prices, people actually start to shop and not necessarily go to the gas station closest to them. So I do expect them both to pull back. I've said it on TV. I think crude oil is overdone. It's hedging and speculative at these kinds of prices. That's why as soon as you get an announcement from two major nations, they're not going to import Russian crude anymore, you don't even get a new high out of it, because that's the speculative hedging nature of the decisions that could come. The next thing you might see people hedge is the possibility for Russia to retaliate and actually cut production a little bit to the rest of the world, further crimping supplies. But they couldn't do that for very long because it's really one of their major pipelines of revenue. But I do expect them to pull back, yes. But as we talked about last week, I mean, what's the pullback to?
100.
$105?
Well, let's just look at we have this potential 4-hour double, and the full target would be $100.58.
Mm-hmm.
So that's
There
your
you go.
floor is now 100. That's where we are now. If we got the longer term pullback, do you see, especially in how about the oil stocks? Do you see them then after a pullback continuing to new highs?
Say that one more time. I'm still fighting.
Well, after a pullback, because we will at some point get an oil pullback, and we'll get a
Yeah.
pullback in these energy stocks like the Exxons, the Chevrons.
Yeah.
Would you see those as buys again, for buys and rotations back up, or did you say that, oh well, the top's in? I think they're just gonna either move sideways or continue a larger pullback longer term?
So, Mike, you'll love this answer. I see it as whatever the charts say I should do, I'll do, especially in this case. I'd honestly like to see a significant pullback and then probably get long from there. But there is going to be some level of demand destruction here. What we don't know is what form that's going to take. Are people going to take public transportation? Are more people going to demand they work from home because gas prices went up? Or are people going to buy electric cars? Or are they going to sell their car and buy a scooter? And that's going to be a permanent, somewhat permanent elimination, right? So I don't know yet, but I'd rather see two dips before I'd consider it a buy. And I do not consider this a short because the risk to the upside is just too great.
And we've talked about this. This is where I talk about trading around the core position, where you put on, again, I've talked about this repeatedly, on the pullback to the first area, the buy zone. You may, if you're doing a full 2% position, you put on 1%. And then on the
Yep.
secondary pullback, you put on 2%, with the thing in mind of knowing where your stop is, because as we start off this broadcast, you always know where your stop is. Otherwise, you shouldn't be in the trade. So even if you're doing
Right.
two ads, it's not where I've talked about cannonballing before. That's just out of desperation. But two ads is all right. I already know I'm going to add twice, so I'm going to subdivide my position. But then if it comes down to this, a certain level below that, I have to know where my stop is, because it's not just add.
Right. And it's also, I mean, for example, if you look at it from the perspective of futures, the CME has come out with that micro crude contract. If I were going to buy along, it would likely be in micro crude so that I can have a tiny, tiny position size with a wide stop and a wide target. And the technical analysis that Mike does, because of the big swings, likely the targets will be far away and the stops will be far away. So when that happens, you want to shrink your position sizes down.
Let's just see. From wavy Nasdaq down 21.84% for all-time highs, well below the 200-day. Tech remains the weakest. Yeah, tech is horrible. Christoph, in international comparison, the U.S. stock market is still outrageously overvalued. Do you agree? European stock markets are already back to pre-pandemic levels.
Look, if somebody said to me, do you want to buy oil at 128 or do you want to buy European banks at 50% of book? I would probably buy European banks. But in this kind of an example, you have a weird situation where the EU is likely to get the brunt economically of all of this, most to all of this, because of their reliance on Russia, their reliance on the Ukraine, their close proximity, whatever sort of bullishness was being priced in with the idea of the Ukraine joining in the EU. I don't know enough about those geopolitics to know that, right? But from that perspective, that's more of a duration issue. Like, how long are you looking to hold these things, and how small can you get your position size? I guess that's the best way that I can answer that.
And what's going on with copper? There's an immense increase in variable costs of sort of smelting, refining, energy costs, price at the end product has to increase or production will be reduced. Copper, let's see, and copper hit over $5 and now is pulled back. You got this little mini double, but then you see the volatility also in copper. Any thoughts on copper, Bob?
Yeah, so that copper dip that we saw was because the LME, not that's my opinion. The spike we saw is because of margin calls, and then the LME basically said you don't have to make your margin calls, mainly to a couple of Chinese banks, mainly to China Construction Bank. So there was a lot of like saying, oh, wow, they have to get out of a bunch of stuff and they have to get some margin calls and blah, blah, blah. And then the LME said, we'll give you a break on that. And copper collapsed. So it's kind of back to where it probably should have been, which is still pretty high up. So that's what all that volatility is. There were margin calls that the LME let these Chinese banks and Chinese mining companies out of.
What about thoughts on the LME with nickel, which...
Same thing, right? I mean, they basically, if they did it with copper, I can't see a problem with them doing it with nickel either. There's a huge Chinese miner that's deeply underwater on nickel shorts as well. So I suspect they'll do the same thing, but I don't really look at nickel much because you can't trade it. We can't trade it. I can't trade it.
Already seeing people trade out of large trucks and SUV here at the Toyota dealership because of gas price increases. Feels like a lot like 2008 at this point. Do they actually have stock for people to get? I mean, like around me, the dealerships lots are empty.
Yeah, I think it's the same. Again, I've got two used cars, one we bought new and one we bought used. Both of them are worth more than they should be. The one we bought used, we've put about 6,000 miles on it. It's worth more than what we paid for it. And the one we bought new, which has 32,000 miles on it, we got it with like 300 miles on it, is only worth about 1,500 less than we paid. So I've actually been thinking, this is the only time in history I've ever seen it possible to do this. I've been thinking about trading both those cars in for new cars, right? Because even if new cars are priced a little higher, there's still the MSRP. If you can find one that'll sell you without a markup, any kind of car, you're making out, and you never make out in cars. So I've been trying to figure out a way to take advantage of that and dump these two cars, because with used cars, this just never happens before. Car lots are very empty. You can just go, and because I've been doing that, I've been looking at car lots online. They'll have one new car and then little ads that say, this car is on the way, this car is on the way, with no pictures. And when you call the dealership, they're like, yeah, it's being built. We don't know when it'll be here. So.
Yeah, I have a car coming off lease, and I mean it's already worth 10 grand more than my buyout at the lease, so I'm just gonna have to buy it. I don't even know if I can go lease another car, because I've been looking at lots, and around me they're asking 5 grand over sticker for some stuff.
It's crazy.
So I'm like, all right, I'll just buy out my car off, let it roll off lease and buy it out, because again, it's worth 10 grand. So if I could find another car, I can flip it.
Right.
But I can't be without a car also. And I'm not going to go into a dealership and say, okay, here's an extra 5 grand at this point, because at some point it won't be 5 grand over sticker. But gas is $5. What's the gas around you, Bob?
It's still right under $4, just under $4. So it's interesting because the gas prices I saw, there was a record high. I think it was in the Oakland, San Francisco area, of just over $6. The national average is above $4. Places like New York and Illinois, it's at $5. California, they've got a $1.25 gas tax that they're thinking of, and that's what puts it up over $6 in some places. they're thinking of suspending that temporarily. State has a massive surplus because of all the tech companies there, but they've still got $1.25 gas tax when gas is in some places up over $6 a gallon. Just horrendous. Talk about predatory. Yeah, but down here it's still just under 4. I don't think it will be tomorrow.
Let's see. So yeah, supply shortage here for sure. We literally have 0 new Toyotas on the ground right now. We do have some used vehicles, but not many. And that's where I had to take my car into the dealership a couple weeks ago for a recall repair, and they had two new cars for sale and 3 used. Literally, there was nothing. The lot is completely empty. I mean, you're walking around going, it's all empty. I've never. I asked them, how many new cars you have? They are like 2.
It's crazy when you think of like what's going on with the supplies of goods and services. I mean, there's a specific face soap my wife buys, and like she bought 6 of them last time, and then she went to the store like 3 times after that, and she's literally like cutting the top off and scooping the bottom out of the squeeze bottle because she can't find any. Yesterday she comes back with 2. I'm like, why'd you buy only 2? She's like, that's all there was. It's just a face soap. I mean, it's not something crazy. It's like we're living in post-war Poland. But there's also, from the car perspective, I have a friend that works at Ford, corporate Ford, and he said there are acres and acres of Ford F-150s waiting for chips. Just acres of them. And they can't do anything. They're
So
just sitting there.
they've built the car, but they need
They've gone as far as they can go without chips. I know someone who bought a new car and they've been promised seat heaters and a remote start when they come in. So they've got the car. But then when they get the parts, they're supposed to bring it back in to have seat heaters and a push button start installed.
Didn't you say it wrong? You need to say it the mic way. Heat seaters.
Heat seaters.
Yes, you need your
all new time
Let's see. Christoph paid wow. €2 per liter. That's $7.58 per gallon. Oof.
Wow.
$3.97 here in Northern California. Stuff around me is over $5 here. And I wish Illinois would talk about getting rid of the gas tax because we have an incredibly high gas tax here, but the state's already bankrupt, so what are you going to do?
Well, that's what I was going to say. I mean, if you wanted to make a ridiculous comment, you could say, well, at least Illinois needs the money. California doesn't need it.
Let's see. U.S. shutdowns McDonald's, Coca-Cola, and fast food chain. Russians will be the healthiest people on earth.
Also, Starbucks and Pepsi.
And you know, McDonald's, they're closing all their locations, but they're still going to pay all the employees.
That's nice of them.
Yeah.
Starbucks and Pepsi also ceased operations in Russia, or said they're going to cease operations in Russia.
Yeah. Lauren says a Nissan lot was empty. Sterling, this is a comment. He was replying to Amit asking about what are the dealers doing to keep the sales teams busy. We sell everything we can get and pre-selling new cars that are on the way to us. So there you go. I mean, literally you're selling everything before it's even on the lot. So yeah, let's see what else do we have going on. What did Notes do today? Notes back down, so the yields back up.
By the way, this is pretty much exactly what we said was going to happen. I remember when the last 6 bars or so was not on that chart. Not saying that we can predict this kind of thing all the time, but it feels very familiar. It feels very much like what we thought was going to happen based on the climate, just based on the way the charts looked. It's funny because you can't predict a Russian war would cause it, but still the charts somehow work out. And I always feel like there's an interesting psychology behind that, because basically price action is mob rule. And there are people that have information. Many investors and traders have different bits of information, and oftentimes they point in the same direction. And I really think that's why price action and technicals work, because the mob is pointing in a direction, and almost no matter what happens, the mob is likely to push their direction in the way that makes them money or the way that hurts them the most. And those are the most exaggerated moves, right? But all it is behind price action is mob mentality and mob rule. And when a lot of people think, I'll give you an example. If a lot of people think CPI is going to beat, right, we'll rally into CPI on the yield front, right? We'll have higher and higher yields. And then if CPI doesn't beat, there will be people that will say, well, the next month is going to be horrible. So there'll be initial flash in the other direction, and then that same direction will continue oftentimes if there's a technical pattern there. I don't know that that made any sense, but I know what I mean.
You know what? Well, as long as you know what you mean, it sort of made sense. Well, I've known you
I
for so
definitely know
long that
what
it
I
made
mean.
sense to me.
I
So,
definitely know what I mean.
here's boy the 10-2s. Not much of not much of a bounce in that either.
Right?
Wow, 0.239%. Yeah, so the yield curve still heading towards zero. Let's see. Rich thinks inflation is double digits now. I think CPI is not correct.
Yeah. So there's a guy that I read a lot of his work. His name's Eric Weinstein. He actually works at Deal Capital. He's a managing director there. He's a mathematician. And he has a whole paper on CPI being crap that is just completely pointless. And it's hard to disagree with him because he's got a PhD in math and he has all the formulas that I don't understand that Mike might. But when I read his stuff, I start to think to myself, okay, so you're right. CPI is a flawed metric, but it's what we have, right? It's like what we have, and it's what the market is responding to. So it's almost as if somebody says to me the presidential election was stolen, but I got to deal with the president we have. So what do you what? You know what I mean? I'll give you a better example than that.
Well,
I don't
let me
I
ask
don't
you a
believe
quick
it's stolen.
question.
Yeah.
Does the government have any incentive to make the CPI more accurate?
Well, no, they don't. They don't because there'd be a lot of work to readjust everything that is currently benchmarked to CPI. They don't have the capability to do that kind of an adjustment. But it's almost like, okay, so people were talking about how flawed Chinese data was, right? Chinese economic data. You can't believe what you get out of China. And I had a really close friend that worked at China Construction Bank, and he would crack up when some of the GDP numbers were coming out at 9, 10, 11%. He was like, whatever. He goes, we're not seeing that. But markets were moving on that. So I was like, yeah, I mean, maybe it's bullshit, but it's what I have to do my work based on because it's all we have, right? So I don't disagree with Rich. I just don't know what the hell we're supposed to do about it.
And can't you still do, even if it's a flawed comparison, you can compare it again month to month, or if you, let's say you think CPI should be at a 12% or something annual, and it's at 9.5 or 10, but you can still compare it on that basis. You can still compare the print at,
Right.
it might be flawed, but if you rejigged it at 12, you'd then be comparing 12 to whatever anything else was rejigged to. So you'd still, when it went down, you'd still get it down. I mean, that's really what we're watching for. And I agree.
It's all the same flawed data, right?
Yeah, you're comparing flawed data to flawed data, but you're comparing the same flawed data to flawed data. Now, it gets interesting when they occasionally rejig it completely.
Here's a good example. Let's say there was no digital weather or weather forecast on TV, and I had a thermometer outside that consistently measured the temperature 20 degrees lower than it actually was, right? I would still go, it's 60 degrees out. I better wear a tank top. You know what I mean? Or I would say, oh, wow, it's actually minus 20. I better not wear shorts. I better just get a coat, even though it would actually be zero. I mean, you know what I mean? You deal with the data you have, and as long as it's consistent, it's fine.
Yeah, I used to years ago have a car that the gas gauge was wrong. So even though it showed a quarter tank, I knew when it ran a quarter tank, I was near running out of gas. So I always knew when it got down to that quarter tank, I better go fill up because it wasn't really a quarter tank. How did I learn that? Because it hit a quarter tank enough and then ran out of gas.
A friend of mine in high school had a car that wouldn't make right turns. So we had to make 4 lefts to make a right.
How is that legal to drive?
He didn't tell the police.
What if
He
you
didn't
got in a
report
situation where you
himself.
had to make a right turn?
He would have to go ahead and make a left, a left, a left, and a left to go right on that street.
So what you're saying is he couldn't be a UPS driver because don't they
No,
map out?
the car literally, you turn the steering wheel and it would just go click, 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 and the wheels wouldn't turn. But if you went to turn left, it went. It would turn back to center, but it wouldn't turn right.
Gotcha. Wow. Learned something new today. Do you guys see any way we escape a recession at this point with all the macros working in his favor?
No.
Nope. We're, and again, the Fed put itself in this horrible rock and hard place because they just can't cut anything.
Yeah, look, it doesn't mean it's going to be a deep recession. It doesn't mean it's going to be a long recession, but I see virtually no way to avoid a recession.
Abraham, Amazon's still trading a much higher PE ratio compared to Apple, Google, Microsoft. Do you know inflation is a bigger deal for Amazon?
Amazon's still trading much higher PE ratio compared to Apple doing. Inflation's a bigger deal for Amazon. I mean, honestly, is it?
I don't know. I'd have to look, but I'd have to.
So, yeah, I don't know if it is. I don't know. It's not a bigger deal for the Google. It's no big deal at all. Search is free. Yeah, their advertising revenue might go down, but their usage is likely not to go down. Their usage has actually been going down because of politics and the fear of big tech more than inflation. Apple, yeah, I mean, I guess supply chain is probably a problem for Apple. Who was the other one? Apple.
Microsoft.
Yeah, I mean, again, could be, but Amazon, a lot of Amazon's known as cheap, right? Even though I said a long time ago that people actually took the time to compare Walmart, which has a 2-day delivery instead of an overnight. So you order on Tuesday, you get it on Thursday instead of Wednesday. When I've done it, probably 75% of the time, Walmart was cheaper. So I don't know. It may or it may not be. I'm not sure.
Here's Rich's trading advice. If stocks fall solely due to threat of war, buy the dip. If nuclear war doesn't happen, you make some profits. If nuclear war happens, then you won't need the money.
100% agree. You buy the nuclear war dip. Rich, let me know when it comes.
You better have your timing right on that, though.
I don't know where Rich is, but if nuclear bombs are launched and we get the warning, I'm driving to Rich's house and having a bourbon with him.
Raj, there are so many parallels to 2008. Oil prices, commodity prices, housing prices, stocks were near all-time lowest interest rates, now rising. Complacency by traders.
Yeah, so like the fall that we saw in 2020 was 32.6%. February 2020 to March 2020 in the S&P, all right? I'm not going back as far as 2008. I don't know how anyone thinks that this particular case is not bigger than that, what we have going now in terms of equities. 2008, what was that drop? 70-some percent, 60-some percent?
I don't know. I just had a chart of wheat up. Look, the last time wheat was up here. There's
Is that 2008?
Yeah. March of 08.
Here, I'll measure out the S&P in 2008 because again, the drop in 2020, the pandemic drop, was 32.6%. So I'll look at the S&P in 2008 unless somebody has it there handy. What was the drop? And I'm going to go off of a continuous ES chart. So S&P futures continuous 2008. Let's go to a monthly here. And I'm going to do approximate.
Well, here I can do it right now. From the high to, I'm just going to do it to the low.
I'm seeing about 57, 58%.
58.04%.
Okay, so I guess my guess of 45 is probably pretty right. And actually, it's funny. I didn't measure out 2008, but I did measure out 2020. And I thought this is worse than in the pandemic, what's going on right now in its totality. And I think that's where I came up with 45%.
So 58% would be right around. You know what's interesting? Can you see the chart?
Yeah. Oh my God. That's awesome.
That would take it straight back to monthly 200. But that's yeah, woo. But then you all right. So we have that parallel. We looked at wheat. You have crude. Look at the crude chart. And I know people are still calling for 150 bucks a barrel, but we're up. We're the highest it's been since 2008. And so wheat,
Yeah, I think
crude,
that's the comment of the day. Looks like 2008. Who said that? Rich?
Raj.
Raj said that?
Yeah, Raj wins the gold star.
Yeah.
Uh, Similar to 2008, but we have a war. It's 2008 Pro Max. It's 2008 on steroids. PE is also stretched much more in 2008. Yeah, it'll be interesting. It's this next year is going to be interesting. I think the market is still very complacent long term.
Mm-hmm.
And I think with all this stuff, you're going to see, we have the short term shakeout from these sanctions and everything else, but you're going to see interesting things go on with some more Russian defaults, credit default swaps potentially not paying out. It could get interesting longer term with some of ripple effect that's not being priced in yet. And I don't think they know how to price it in yet.
We've been in such a buy the dip mentality. The key to me is going to be whether the Fed gets involved or not. Europe is a mess. We talked about Europe a little bit ago, and I suspect Europe is going to try full on MMT to try and prevent sort of a upper economic collapse. And what I mean by that is obviously equity markets, asset prices. And then does our Fed completely flip and expand the balance sheet again? And if they do, so this is what I said in an interview last year, is I said that I thought there were going to be two dips, a corrective dip, and then move into a bear market before we ran up and finished the year, maybe up 3 to 5%, right? And if that didn't happen, meaning that we didn't get a bear market, is because the Fed got involved to try and prevent a bear market. And if that happens, I might go to cash for the rest of my life. Because literally, if they go full bore into quantitative easing again to prevent this repricing, I mean, their balance sheet is going to be 15 trillion, 20 trillion. It's a level of balance sheet you can't unwind from.
I was just going to say, how do you ever unwind it?
You can't. And then you combine it with the fear of a lot of countries, maybe countries that aren't so chummy with the US like the UK is. I mean, I'll ask some of the non-Americans here. If you were running your country, would you want to hold US assets, considering that the West can basically freeze everything you have like they did to Russia? I'm not knocking the sanction. I'm not a geopolitics expert. But yeah, Rich, you're right. It would be gold. But, from that perspective, it's like if you're, I don't know, Venezuela, if you're Iran, if you're Syria, if you're one of these countries, if you're the UAE, if you're Qatar, sorry, it's pronounced Qatar. If you're one of these countries, are you going to buy US treasuries? How about, if you're Saudi Arabia, would you want to do that? Wouldn't you want to maybe lean in the direction of some sort of different currency for crude oil to be priced in? What if the next administration gets mad at you? What if the next combination of the US and the EU gets mad at you for something? It's really scary to me, man. I hope the Fed doesn't get involved. I hope they let the repricing happen and this all kind of goes away and history looks at it as a one-off event, but I don't think that's what's going to happen.
Wasn't it better to let the wound heal instead of letting it fester and then eventually losing the whole limb?
You would think.
But can everybody go full bore MMT?
I mean, they print it, so I guess.
I
No, I'm waiting to see the Bitcoin regulation that's coming out probably this week, an executive order on regulation. That's the part that I think makes it a little dangerous. Why an executive order on regulation of cryptos? That makes it seem like it's some sort of emergency.
Hmm.
I
Well,
don't
aren't
know.
they already freezing? Certain exchanges are they're already freezing wallets for that they've. I mean, this is one of the flaws that I think a lot of Bitcoin people don't talk about. They're like, oh, it's completely anonymous, but it's not.
It's
Because even
not.
with a lot of these Bitcoin scams, you can pinpoint the wallet and who owns the wallet and who's transferring the stuff around, and you can freeze these things. You can get to them.
Yep.
You might not be able to drain the stuff out of it, but you can definitely halt transactions with it.
Yep.
So it's not like this panacea of exchange. Like the government can't touch it. Oh, the government can touch it. They might not be able to directly get to it, but they can clamp down on it so you can't exchange it.
Right.
And therefore, if you can't touch it, what happens?
I don't know, man.
Uh, let's see. Well, as we know, the war has caused issues when it comes to commodities and energy. Why isn't the Fed trying to make an effort to slow down inflation as it takes time to tame, not instant?
Well, I mean, again, I think they are. We've talked about this on here before. Both Mike and I think they missed their window. I think specifically it should have been June of last year. Probably could have been May, but I think it should have been June of last year. It further proves to me what a political animal the U.S. Fed has become. I mean, that's all I can say. I don't even remember when they got. The minute that it became completely clear to me, and it was always a suspicion, is when they started saying that they have a dual mandate of price stability and full inclusive employment. That's when it became clear to me. I can point to a second sort of a 1B where they said they're going to look for an adjusted average of 2%. Mike and I've laughed about that over and over again. Mike's a math whiz, and both of us took statistics, and neither one of us remembers being taught what an adjusted average is. But from that perspective, when you talk about the Fed saying we're going to target full inclusive employment, then that means you theoretically could be at full employment. But if you're not at full employment of women, you're not there yet. So you keep with monetary accommodation. If the Black population isn't at full Black employment, you keep with the accommodation, even though the economy might theoretically be at full employment. Those are political scenarios. And, again, I don't think the Fed is taking its mandate, its original and long-standing mandate of price stability as seriously as the others until now. And that's why I think they have to raise rates now. They have to. They can't back out now.
No, they can't. But yeah, again, we'll see how many they get in. If they ban Bitcoin in USA, price drops to 10K. I could easily
Maybe
see that.
lower.
I mean, I've talked about that long term, very bearish, and that was before just in the price action. I'm long term bearish on this, but I talked easily. We could see 20, and if they do a ban, it could be 10. Bitcoin is
Yeah.
not what it used to be. You get in the fiat currency, you need a bank willing to take your money. Rich coming back, but the problem is China. They want to invade Taiwan. I agree. That's where you have still risk in the semis because if that were to happen, boy, you want to talk about
What?
supply chain issues?
Yeah.
Forget it.
Bad.
Then forget the. You want to talk about go buy your electric car now.
Yep.
You'll W browser entropy starts real slow and then it goes real fast. Uh, there's nothing more than a convenient reason for these politicians to get their grubby hands on cryptos because it galls them that they have no control of it.
Can't disagree.
If China invades Taiwan, we are doomed. Well, it's gonna make what's going on now look like kids' gloves.
Yep.
It will. You want to talk about inflation getting worse and supply chain getting worse and everything else. You know how long it takes to bring a semi? What percentage of the world's semiconductors are produced out of Taiwan?
It's
It's
over
huge.
60%. It's huge.
And you don't bring a semiconductor plant online real quick.
Yeah.
It's like, even if you dedicated everything, it's got to be a 2-year turnaround at least. And that's if you could even get the parts to build the semiconductor plant. Because
Can't get me on.
it also requires semiconductors to build semiconductors. So you have a really bad feedback loop there. All right. It's market. We have some positive people in here. Market is already doomed. It's just a matter of time.
63%, Mike.
63%. So that will make, and we already have a shortage. And then if you have a certain percentage produced out of China, I wonder what
China is 6% out of China, 18% out of South Korea, basically almost all Samsung. And all others combined to make 13%.
So where are we? We're in that 13%.
Yeah, we're in others.
So essentially, we're screwed.
Yeah, we don't make any according to this.
Because you take China off, because if they're invading Taiwan, we're not going to be getting much from them.
Right. So you take the 6% from China and the 63% from Taiwan. You're basically 70% of semiconductors are gone.
70% of semiconductors are off the market.
Yeah.
And look at what happened just from the last couple of years. So this is where I go shopping for a vehicle that does not need semiconductors, because if anything breaks in your car, you're not getting it fixed. I don't care. You're fine. Your heated seats don't work. Great. But your
Right.
something else, everything's electronic. I mean, I had a recall. My car had a recall that came out last October. The vehicle manufacturer called me and said, we'll want to schedule an appointment. So I scheduled an appointment with them. They hooked me up at my local dealership. I was literally driving there. They called me and they canceled it. They're saying, we don't have the part. We can't get it. I said, okay, when? They said 3 weeks. So that was in November. We rescheduled for December. Couldn't get the part. I finally got it fixed 2 weeks ago at the end of February. So that was...
You remember I had we have a Mustang, a 2016 Mustang, and it had a fuel intake problem. It was in the shop from November 10th until March 10th. No, I'm sorry, February 10th, because they couldn't get a part.
See, that's where literally China, here's your trading tip. China invades Taiwan, go buy a car, even a gas car that doesn't need electronics. You'll be thankful.
I gotta look. Well, I'm in Florida, so I gotta look. Maybe a scooter will do. I don't know.
You can ride a bike though.
Yeah, I do that a lot. That's why Rich earlier said I look tired. That's why I'm tired. I rode my bike to and from the gym today, trying to save on gas.
So there you go. The assets purchase program stops this month. It stops.
So it's not officially announced to me, but yes.
I thought it was supposed to unwind by the 9th.
Several of them have said, but again, in looking at the Fed's balance sheet, it hasn't stopped yet. So they're supposed to give a date at this next meeting, but it's supposed to stop March 9th. But look, that's obviously tomorrow. So.
Yep. So, all right. Well, we should wrap this up for now.
Mm-hmm.
And Biden defending freedom comes with costs. Didn't he rave about lowering that gas price though a couple of weeks ago?
Yeah, he did. He said we lowered it, but now he called this Putin's gas price increase. He called it that today.
Are we going to reopen our pipelines or finish the pipelines or?
No. So actually so there were 2 Twitter fights I didn't get into today because I was just like, it's too complex. One, people keep repeating, and we could stop after this, Mike, I'm sorry, but people keep repeating that there's 9,000 open leases that the oil companies are not drilling in right now. Okay. That Jen Psaki said that. The energy secretary, I forgot his name, said it today. And they know damn well that about over 80% of those are just previously leased by one company, and they're either drilled as dry sockets. They've been investigated and shown to not have oil, or the other remaining like 18, 19% of those that do show oil have been blocked by a judge because they didn't plan the drilling with climate in mind. Also, there's supposed to be 2 lease sales every year. There's only been one, and that one has also been blocked by a judge, an Obama-appointed judge, because they did not plan the drilling with climate in mind. So yeah, there's 9,000 leases. 81% of them previously been checked and don't have enough oil, or it's not cost effective to drill into them at any price, or they're dry sockets, or they're tied up in court. So that's BS, but that was way too much to try and explain to somebody on Twitter. So I just went, like that. And then what was the second thing? What did you just say, Mike? There was something else.
I don't remember. I'm getting
I
old.
don't either. But there was something else. It was the night. There was another Twitter fight I decided not to get into. It was energy related. I don't remember it. Whatever.
Oh, well, we've had a positive day. By the way, here's Amit. The one blessing is the 8 fabs Intel is building, but won't come online until 2024. Well, that's 2 years off.
That's great news.
I mean, that's good news. Yeah. That's the way to end the show. Bob, your Twitter feed is great. But you have a Twitter feed? Man.
Yeah, sometimes I get upset. It's Bob_Iachino. Sometimes I fight a little bit. I always try to be very polite, even to the people I'm fighting with. I always thank them for the comments, but I just point stuff out, you know? And sometimes I take a side you probably wouldn't guess that I would take. But, yeah, so Wavy says, I stand by your comment to boycott the Chinese the same as we do the Russians. So all these corporations are individually sanctioning Russia, right? It's called voluntary sanctions. All these corporations coming out because they invaded Ukraine. And so far, there's still fewer Ukrainians killed than Uyghur Muslims, right? So there's like a genocide going on in China, but Nike's still there. McDonald's is still there. They're all still there. I can't get LeBron James or Michael Jordan to comment on it. They won't comment. Well, what are you going to do? They don't know I exist.
They're ignoring you?
Yeah, you believe it?
I can't believe LeBron would ignore you.
I know, right?
Does he read your Twitter feed?
Who?
LeBron. Didn't you respond to him?
I'm not sure LeBron reads.
Didn't you respond to him? Didn't you have I thought I saw you tag him in something.
I did. I tagged him in the Uyghur Muslims thing.
All right.
But whatever. We got to go.
Yep. Final thing. Global rating agency Fitch downgrades Russia from B to C.
Great work. Very timely.
Yeah.
Nice work, Fitch.
That was getting ahead of the curve. It's like when you get the analyst downgrade after the stocks dropped like 50%. It's like, oh, now we'll downgrade it. That's the bottom. Great job, guys. All right. I will go over, so if anybody wants the stock one, will start a couple minutes late, but I will go over some of the markets so we have all our key levels for tomorrow and look at some stocks. Thank you, Bob, for attending as always.
Yep. I'll see you guys on Thursday or any morning that I can make it.
All right. It's always open on any morning, maybe Thursday morning. When do we get the CPI? Thursday morning?
Thursday morning. I'll definitely try and do that.
So if you can jump on Thursday morning, I will be waiting for you. All right.
Cool. Send me a reminder text, Mike, or Wavy. Hit me up on Twitter and remind me.
Okay.
All right. See you guys.
I will talk to everybody in a few minutes in the stock segment. Bye for now.